The Munro Global Growth Fund returned 3.3% in the September quarter. The fund's long positions, short positions, and currencies were all contributors to performance, while put option hedging detracted from quarterly returns. Equity markets in local currencies were broadly unchanged over the September quarter, but volatility returned to markets with a market reversal as we entered the month of September. While the fund had avoided much of the risk around the COVID-19 Delta wave and also around the China slowdown throughout the quarter, the headwinds actually started to spill over to the broader market towards the end of September. From a stock attribution perspective for the quarter, positive contributions came from innovative health leader Danaher, software as a service company, ServiceNow, and Dutch semiconductor lithography leader ASML. Detractors in the quarter included PayPal and e-commerce giant Amazon. We remain positive equity markets medium term. Earnings growth is likely to continue, while the structural trends driving many of our investments continue to build momentum. Near term, however, there are some hurdles that need to be overcome. Input cost inflation has continued and looks likely to negatively impact corporate profit margins. Elsewhere, emerging markets continue to struggle with the COVID-19 pandemic, creating added supply chain bottlenecks. And finally, the makeup of the Federal Reserve is entering a period of uncertainty, as some members are leaving due to insider trading allegations, and this has coincided and clouded with Chair Jerome Powell's renomination. The sitting Democrats in the US could now potentially reshape the Fed in line with their progressive agenda, which, if acted upon, would unsettle equity markets further. Considering these upcoming hurdles, we felt it prudent to reduce net equity exposure back to a more neutral position. We will use any upcoming volatility to slowly increase exposure back into the dominant positions that we like, that are traded attractive free cash flow yields relative to continuing low interest rate environment. And this remains in line with our medium-term positive market views. Thanks for listening.